Aloha everyone, Joshua Hayes at BigWaveTrading.com. Well, it finally happened. Why do I hate V-shaped no volume rallies? Well, you saw it today. So, following our sell-off on Monday, it looked like it was somewhat contained on Tuesday. The morning started off weird, and I noticed that it was a major character change in this market since we started to rally off those April lows. However, by the close, everything appeared to be orderly, and I got new long signals. Following today's session, guess what, folks? Zero new long positions. I flagged a few stocks. I flagged Cassie as a potential future long. No way would I buy that pattern. BBX is a potential future long. No way would I buy that pattern. Pola as a potential long. No way I would buy that pattern right now in this market with the BOP doing this and the volume below average. And then AMRB, way too thin in this tape. I like everything about it, but I want a candle fully over candle. And even though it closed higher in the session before, I want the high above the previous day's high of day. So no new long positions. The closest one was MHH as an ad signal, and I in good conscience cannot take this as a new long position with BOP not even being green today. So with that being said, nothing triggered, and that also is a major character change. First time since that April bottom that I've seen this on a down day. So this is a major red flag. We definitely do not have time to go over the 50% and 100% signals. Now I gotta admit, it wasn't all terrible out there. One of my largest long positions is RIB-T. Bought it here, added to it here, added to it here, added more here, and then I think I added even more here. And now recently you can see it's up 22%. From my initial long signal up 34%, and it's one of my biggest positions. So it's not all terrible there. And even though coming into today I was tracking 260 stocks and 200 of them fell, still, or right around 200 fell, 65 were up on the day. So it wasn't all terrible. I mean, some of the positions I'm long, like EGAN, hit a new high. EGY continued to move higher. And then, of course, I have my hedges like in LABD and TVIX, so it wasn't terrible. But you will see a ton of 50% and 100% sell signals. But another thing you will notice, if you're not familiar when we went long these positions, you can do a simple search on the webpage, and you will see over 75% of all of the 50 and 100% sell signals this evening are for profits. They're all for gains. And even though I've been spending a lot in commissions lately, I normally only spend about 1% per year in commissions. That's anywhere from $5,000 to $6,000. I am way okay with that to keep my losses small and to protect my profits. So with all of that being said, with no new long positions, with all of these sell signals, with there still being some bright spots, I just want to really focus on the market in this analysis. Now, I've told everybody, I do not like this tape until we can break out above this trend line on the SPY or this trend line on the SPY. As long as we were below these levels and rallying on low volume, not a fan. Not a fan. I'll still take all my long signals, and if new long signals would have triggered today, I would have taken them today. But instead, nothing triggered. I'm still not super bearish on the market yet, but I mean, I am bearish short term, but longer term, I'm not completely bearish. I still think that as we head into July, we could see a good July, but I always remember 2007, that's when the market topped. It was in July. And then we led into the 2008 bear market. I also remember the flash crash of 2011. That happened in July. So I keep all of this in the back of my mind, even though July is seasonally the most positive percent return month for the stock market since 1928, it's still only up 55% of the time. So when it's up, it's really up. But it's only up a little over half the time. So we got to keep that in mind as we go in. The good news is that the majority of our long positions are holding up. And the reason for that, if I can bring this over and expand, it's not going to work if I expand it. So I'm just going to have to do this. And then hopefully you can see enough of it. But the Russell 2000, you can see that the market, while the S&P 500 has been building sideways and lower highs, you can see how the New York Stock Exchange advanced decline line kept hitting new all-time highs, and that correlates to how many long positions I have, how many were working, and why I remain fully invested despite the weird tape. Now, as you can see, the NYSE advanced decline line is rolling over, so that's not good. Then we take that into consideration with how the IWM has traded off that upper channel line, selling off on heavy volume, along with the NASDAQ doing about the exact same thing. Sorry, I don't have any trend lines drawn here. And with the SPY and DIA being rejected at the previous resistance levels, crashing below the 50 and 200-day moving average on the Dow Jones Industrial Average and the 50-day moving average today on the SPY, it's definitely a sign of concern. And then one of my more bigger problems too is sentiment. Look at what the VIX did today. It was only up 12%. Based on that reversal and crash today, I would assume that we would have not only have traded above the 1961 level on the 25th, but closed above it. So it's a very complacent crowd. And confirming that, check out the IBD put call ratio. Not good. So it didn't even spike above the 1.01 that it had on the 25th. So today's sell-off, traders were very complacent as it happened. Now, if you think that the DIA looks bad, and if you think the SPY looks bad, and that the reversal off the NASDAQ at the highs and the Russell 2000 at the highs, then you're not going to like the Dow Jones Transportation Average. I normally like to see the Dow Jones Transportation Average lead a rally higher along with the small caps, and here it is too, breaking the 200-day moving average on heavy volume right after breaking the 50-day moving average on heavy volume and getting no bounce. So these previous support levels are key. If we crash through those levels, I don't know where the next, I know where the next support levels are price-wise, but I don't know how reliable they become. This was a pretty ugly V-shaped market, and now it looks like after all the V-shapes, it kind of looks like a balloon that you let go in the air, and then the air starts coming out of the balloon, and then it starts rolling back over below the moving averages. So I do not like how the stock market looks at all right now. But as long as RIBT's moving higher, I'm not just going to start selling everything. Just not going to just willy-nilly just start getting rid of everything. I'll continue to stagger stops up, and stocks that are moving lower, not moving higher immediately, moving stops up. Still, this year to date, I still have only had one large loss. That was due to me traveling and not paying attention to upcoming earnings on PFMT, and PFMT only was slightly over my max pain level. Now, are all of the commissions with the small losses going to add up and hurt the past 2 weeks, this week, and possibly next week if we continue to sell off? Absolutely. But the main thing is I'll keep the vast majority of my capital intact, and just like I keep telling you folks, I'm not going to keep being bearish. Eventually, we'll get oversold. And by the way, another thing to add on to all this bearish arguments right now, none of those major market indices are anywhere near oversold levels and or at those oversold levels and curling higher. They're all rolling over into the oversold levels. So if there's no bounce in price, momentum everywhere, every index is to the downside with a complacent crowd. It's just everything is lined up very bad here. As once again we head to the seasonally bullish month of July. This has been a very, very, very bad year market-wise. I don't care what anyone says, unless you're day trading. If you're day trading, it's fine. Day trading, the stocks like I showed everybody today, Yuma, I'm going to start focusing again on the SPY option trades in the morning, and then the end of day low cap, not low cap, but low price, higher volume runners that are near their highs going into the close for a possible 10-20% move into the end of the day. So now my shifting of my time frame goes back to more towards intraday. But every time the market rallied this year, it was on low volume, and during seasonally bullish periods when the market should have rallied, it did not. And during bearish seasonally periods when the market should have declined, it rallied. And here we go though, with June being working out correctly, bullish at first, bearish at the end. But now it's so bearish that it'll be interesting to see what happens in July. But I'll be ready, and like I said, I love buying stocks at support levels when the indexes reach like this 200-day moving average, this upper trend line, this lower trend line, no matter where it is, and then they start to curl. When the indicators are also oversold and curling, when the crowd is more bearish, and then I get the chart patterns that, while they're not perfect, look like BOLA, look like BBX, look like Cassie, then I look to start pushing my capital heavily into long positions, and in those long positions be more confident that they will work and have more conviction within that confidence that they will work, because everything will be lined up. Right now, everything is against us except for the mere fact I have a lot of long positions still holding up. I was actually surprised there wasn't more 100% full sell signals considering the vast amount of stocks I'm tracking in long. But still, I'm going to consolidate and raise stops across the board. I mean, it doesn't matter. But until, when this market bottoms and finds a floor, I'll be ready to go heavily long with confidence. But I've been warning everybody for weeks now, and I've got a lot of new subscribers lately, and they're jumping into these new positions. And I keep telling them, I have no favorites. I'm worried about the market. I'm still taking my signals. And don't forget, the vast majority are working. I just was talking to somebody. While TRC has failed, Zyme has failed since the 19th. New long positions, BRT is still holding up. LABD, the hedge is working. OPBK is holding up. AMBC is holding up. TLRA hasn't hit my final stop. HBIO is still holding up. Doesn't look good. PFIE, TZU, HLNE, AVYA hasn't crashed completely open. IEC, AMOT, IIPR, SYNT, SDT, today EPAM, PES, PFSW was a shitty stock, PVTL, and PFSI. Overall, doing pretty well considering what the market's doing. They're not working, but they're not failing. They're holding, and that could be a positive sign going forward. But either way, the red flags are up, the caution flags are out, and I'm going to start being very careful here. So to become a new long position in my portfolio, it's going to have to really impress me until the market starts trying to find a floor and I have some evidence that sentiment and oversold conditions are here, and then I'll go ahead and start taking new long signals as they trigger. But unless they're beautiful and I'm in love with them and just can't get enough of looking at them, they're not going to make my portfolio, guys. Right now, it's caution time. All right, everyone. I'll see you in the chat room on Thursday. Aloha.